Thank you guys, everybody, for being here and having us. I really look forward to going through this with you guys. Okay, so why is it really important to understand the profit and loss statement and understanding how it's organized? Sorry, how it's organized. So there's a standard form of accounting. It's called USALI. USALI stands for, Standard Accounting in the Lodging Industry, okay? Unified Standard Accounting in the Lodging Industry. It started in 1926. We're currently on the 11th edition, and they're going to be letting out the 12th edition. How many of you guys actually use the USALI method currently on your P&Ls? Okay. How many of you close your books and use it monthly? Okay. That's less than 5% in here. Okay, so why is this important and how is it structured? The structure itself is pretty important for you guys, okay? Normally on our P&Ls, we have rooms, food and beverage, we break out, other operating expenses. USALI does a little bit more. It has different categories that you see all the undistributed departments. And like when you do payroll, right? Do you break your payroll down and show the payroll taxes and whether it is payroll in your management section, whether it's payroll in your housekeeping, whether it's bonuses, whether it's vacation time, all of that stuff, is that broken down or are you not doing that? That's one of the things that this structure looks at as well, okay? The things that you have to keep in mind with USALI is even though it has over 138 to be comparable with everybody else, the idea is to have something that's uniformed, right? And the reason is when you go to a broker, when you go for these things, they're looking for certain metrics and they're gonna, discount you. They do with certain hotels because they're looking at a whole bunch of other ones. And if they don't understand your P&L or it doesn't look right to them, you're not getting the best for your investment, right? And you want to be comparable and you want to be competitive. But not only that, you want to learn to use your P&L to increase your daily operating expenses, even if you're not planning to sell or anything. Why can't you use it monthly to increase your own bottom line revenue? This will help you do that, which, we all want more money. So the basic industry formats, okay? You do not have to use on here it said you can use 99 to 138. You can function with 46 different breakdowns, but it's not necessary to go all the way to the 138, and you can choose the ones that are important to you and your operating, how you operate. You're gonna learn that as you use this format more, what's working for you and yourself, right? The biggest takeaway, if you take nothing else away from this, is the summary page. You can ask my counterparts here what people look at when they're looking at this uniform thing is the summary page. So if your summary page is matching up, you're kosher. Okay, that's what you're looking for. So when you look at your pages and stuff, we're going to show you some examples and I'll break out some of the differences there, okay? There should be a page for each department. Like I was saying, breaking down the payroll and breaking down all the different aspects of not just that, but your other departments, your occupancy, your, how much it is to run each room and everything like that. The format goes months on the left and then years to the right, okay? On here, it says what I'd already said about the payroll, and then the additional statistical information that everybody looks at is the rooms sold. Now, we all have some of this stuff in your star reports and everything, and I know you guys track it, obviously, but your GOP line is pretty important. That's your gross operating profit and everything. When you use QuickBooks, how many of you here use QuickBooks? Do you guys use QuickBooks? Where does your GOP line come when you do your P&L? It comes right up top, okay? When it comes right up top, then you have your expenses coming out underneath. Well, when you're looking at a uniform thing, that's not what it is. What we're calling our gross operating income at the bottom is actually the GOP line that they're looking for. So the structures are slightly different, right? And that's very important when you're doing your analysis. So keep in mind, the biggest thing to take away is how the summary page is, okay? And you don't have to be super complicated. Just get in the practice of using it. I think that's the biggest thing. Get in the practice of using it, and then you can go to any of these resources to learn how to maximize your property for what you're trying to achieve, because everybody's goals are different. So the best ones, obviously, compare the last year to date and the budgets and everything to what you had previously. Now, again, these numbers are, hefty, but I can give you an example of several hotels where their occupancy, the revenue, everything is the same, but their net profit was $200,000 different. Why is that? Because one was using the standard stuff and they could do the analysis monthly and they increased their bottom line. Are we looking at our gross when we go our take home? Our take home isn't our top line. Our take home's our bottom line, right? And that also determines how you sell, how you get your loans. Everything else is determined by that bottom line, which is another reason you want to be uniform and comparable. Does that make sense? Okay, so this is going to be a little difficult to see because it's a little fine print, but this is to show you basically what we're talking about. It's not to give you like overwhelm you. This is not what you want to take away from here. The summary page, this is what everybody's looking at, and it breaks everything down. You can see below the yellow line where it breaks all of the different things down in the other departments. I can't even read them from here. I don't know if you guys can. But it does do the breakdown for each of the department totals, the profit, the income, and everything like that, okay? If you're not familiar with this, there are companies that do that. There's a couple here, and there's several vendors you can go through that have perfected this method as well. You can also come to any of your resources that you have available at AHOA. The industry accepted format is going to include the month-to-date and the year-to-date totals on the same page, okay? So what this means is when you're looking at another hotel and you're comparing yourself, you could be in the same market and have the same exact numbers, and again, your bottom line is entirely going to change. Because if you know how to analyze this and use everything, you're going to increase yourself. You're going to make yourself, these are the reasons, so those of you that didn't get your PPLs and EDILs and had problems and stuff, it was because of this formatting. So if everything had been set up properly, it would have been easier to get those loans or to get your tax breaks and stuff like that. Because again, they're looking at these formats. So you can see the different formats here. They're going through and explaining, you're just looking at the different formats here, and you can see the actual budgets from year to year and month to month, okay? These are comparable categories, and you can see how they break them out, and they're looking at the differences. Again, this is where you use your analysis. The girls, the ladies, will go into it in more detail for you, okay? I just want to be able to show you the formats so you can kind of see them. This is overwhelming because, like I said, this is the first time some of you guys are seeing this. Don't expect you to take away all of this initially. Just want you to understand it's a uniform way of summarizing everything, okay? These are the different report formats. They break everything out, and you can see where they have the different departments broken out, and you can use it for your P&L and your comparable values. So the room department page, an example of individual departments and the P&L should look like that. When you guys do your payroll, how do you subdivide, whether it is a management, a manager, a front desk, or housekeeping? Do you guys subdivide that at all in your P&Ls? So the easiest way that I found to do it is it's $100. You get it on Amazon. It comes from China somewhere. It's a fingerprint technology. All my housekeepers and everybody have to do it. You can subdivide in there. And basically, when your payroll spits out, it spits out everything by department. Okay? So now you've got the hours broken down by department and stuff. And then you take that and you can subdivide that into your payroll and payroll taxes and everything. So it's not like you're creating hours and hours of extra work for yourself. There's easy solutions to accomplish this with technology and help, okay? So now I'm going to turn this over to my colleague, Helen. And Helen, would you like to come and introduce yourself? Sure. Great, thank you guys. We're going to do table group discussions and see like if you guys can talk about how do you organize your P&L, how you track labor and occupancy efficiency with your KPIs, and how do you use your P&L. So if you guys want to talk about that, and then Helen will come up and introduce herself and stuff so we can discuss that. I'm sorry, I missed the table group discussion part. Take about 10 minutes to discuss this.
Is it on? Okay.
KPI is key performance indicators.
So what we're going to do at each table discussion, we're going to take one of these questions that you'd like to discuss, and then we're going to come around, kind of listen to you, and then we can share some of these ideas with the group. So we want y'all to be interactive. So the first one is, how do you organize your P&L? Second one is, how do you track labor and operational efficiency, KPIs? And the third is, how do you use your P&L? So can we have some table discussions in the next 10 minutes, and then we'll walk around and we'll pick some of you guys. So.
Okay, so now that you guys have had an opportunity to have this discussion regarding these table topics, is there any questions or any comments or anything that came up that was pertinent?
All right, guys, I think we're going to kind of wrap up the talk over the table, and we're going to take some few
Yeah, so
ideas.
if you have any comments, questions, or anything that came up in your table that was pertinent regarding these questions, if you could just raise your hand. We have people with mics that can come around, and then any of us will field the questions.
Well, I've
for
heard
you.
some good stories here, Mayuri.
Go ahead.
Mayuri?
Yeah.
I want to let everybody know that we do look at these profit and loss statements, but I guarantee you probably more than less than half would probably know how much they need to operate every room on their property, such as what is the base dollar amount that you would need per room if you had a 100-room property for the 100 rooms, not by occupancy 60%, 70%. But this is why it's so key for everyone to know these financials, because you're not just looking at occupancy and ADR. What you're looking at is at the total bottom line. So if you had 100 rooms on your property, what does it actually cost each room yearly after you figure it out? So for like my property, I have 111 rooms. Base rate would be $27 is the lowest I could ever do to make a profit. So keep that in mind for everyone to know that you should know that too. But this gentleman has a great idea of how you can manage your daily expenses and how labor cost can be driven by a certain way of technology he's using. So I would like him to share, and his name is Pranay. And where are you from, Pranay?
Virginia.
Okay. So can you share what you do at your property to minimize your labor cost and kind of track it so you know how to keep in track with alignment of what your property does?
I use Homebase. It's a time clock. It's computer friendly, mobile friendly. You can see scheduling to everything pretty much. It does schedule. It lets employees know when they're on the clock to they're on schedule to make sure they're ready for their schedule pretty much.
Does it separate departments?
It separates departments.
And it's free, up to 24 people?
24
on each property.
people. Yep.
So if somebody wants to use that, it's something that you could use. So it's free, up to 24 employees on a property to help you track everything that you need for your P&L. A lot of people say we just give it to our accountant does it, but accountant's only following what you give. They're not doing it in detail breakdown. So thank you for that tip.
That's
Millie,
excellent. Thank you.
Millie, you have anybody up there?
Actually, everything does by my accountant. In each table, if you ask everybody, everything does by accountant, right? But we like organize P&L, right? So technically, we do like for the payroll, right? We make sure that what is our housekeeping payroll, make sure what is our front desk payroll, what is our sales payroll. So we do create like sub accounts, like we use QuickBook. Actually, me and my group use QuickBook. So with QuickBook, we create separate accounts so we know that where we are, where we stand. And we, at the end of the day, what is our bottom line? So we use, hey, my revenue is this much percent, my payroll should be under 20%.
And I get that, and that's excellent. And those are the broad strokes that you're talking about. So what this is a further breakdown of your analysis, right? And the reason that's important is because payroll costs change, how you use things change, and you want to be able to look at your P&L month to month. And the way to do that in QuickBooks, what you're talking about is, you know, when you can add a line, that's what you need to do. You need to add breakdown lines. So it's a little bit extra work. But what that's going to do for you is you're going to be able to do a more comprehensive analysis as well and be able to increase. You can see immediately whether it is your cost of goods, whether it's your labor cost, whether it's taxes went up. Do you have control over that? No. But that changes your cost per room for operating cost. And how many of you have fought with the franchise? I sit on a franchise advisory council, okay? The reason I win these arguments with them is because I can come with these numbers and say, listen, you're charging us this percentage. That's taking this much off of my cost per room. If I sell a room for $100, I'm taking this. And I break down every single thing that I have as a cost, and I can show them where operating is so much more expensive and my bottom line is non-existent. It makes more sense for me to shut the hotel, right? So there are different reasons for doing this, and that's the takeaway here. Like, what you're doing is excellent.
Right.
We're just saying break it down further because it's only gonna help you. It's gonna
Correct.
help you in all the different avenues.
Right.
And on your QuickBooks line, you can add the additional lines. It's adding the subcategories.
Subcategories,
Even though
yes,
you
yes.
give it to your accountant.
Yeah. So like subcategory, and between subcategory, you can also make another category. So
Exactly,
make it
right. And then make sure you change your GOP line
I see.
so that it reflects
reflects
accordingly.
more, I see.
And get your accountant on board too.
I see. Yeah, exactly.
Okay.
Yeah, thank you.
But thank you.
Even when you're selling your property too, that breakdown kind of helps. Of course, Helen will go into it. How these little subcategories really, really help a person that's buying a property see where they can streamline it to be efficient from the previous management. But I have one last person here. His name is Kishore Bhai, a colleague of mine. He's going to share his ideas of what he does on organizing his P&Ls.
Well, we use QuickBooks, and tomorrow there's a class at 3:30 at room 3:30 p.m. at room 230 AB. It's about In-Early app that was created by one of our members, actually my cousin, Vimal Patel. So it's a good program. On a palm of your hand, on an app, you can track your employee cost. The managers have to, every weekly, the time clock uploads it to the system, the In-Early app, and you can manage from there. If anybody's going overtime, you can see it, try to make corrections immediately on daily basis. You can see that since if you have a time clock. There's various different systems of time clocks and in the market. So whichever one, everything is compatible. Most of the time clocks are compatible to any systems. So that is important because that'll labor cost eats our bread and butter, our lunch. And then the supply cost also, you can control the managers before they place the order, number of rooms occupied, depending on how much, placing of order, you can monitor that also. And on daily basis, the quick early bird shows you how many rooms sold. Your night audit reports are of any number of hotels you have will be uploaded on the In-Early app, and that's the app he created. And once you, on your palm of your hand, you can open it every day and look it up, how many rooms were sold, occupancy, ADR, RevPAR, total revenue, etc. And thereafter, the other detailed reports regarding the labor cost, even the guest survey, Medallia scores. So when they come out every month and weekly, all those are uploaded into this system of In-Early. So it's pretty good app that he has created in combination with QuickBooks, using uniform standard accounting principles that you just showed us in the initial. And that's the best. And when you sell, as Nancy mentioned, when you sell the property, the analysis and the analyst of the buyer's mortgage company is going to use, it makes his life easy if you have that. Otherwise, it takes time for him to create that. And then the delay in analysis and delay in the term sheet. So all that, it matters. And you can monitor the cost. That's the key part of it. And today, bottom line is very razor thin. We have to be watching it on daily basis.
You're right, you do have to be vigilant. Thank you for that.
And for everybody to know, In-Early is complimentary for 1 year. for AHOA members. And so with this takeaway, we learned that technology can help us achieve that P&L that we need. So thank you so much, everybody,
Yeah,
for
thank you.
participating.
Okay, so now we're going to call up Helen, and she's going to explain a little bit more on the selling and stuff, because she's a broker.
Hello, everyone. Can you all hear me? Okay, great. As an introduction, my name is Helen Zaver. I actually, with Colliers Hotels, I'm a broker. Been at Colliers since 2019, and before that with Marcus Millichap for about 15 years as well. Prior to that, though, hotel owner, operator, developer, everything. So I know where you're coming from when you have questions, when you're looking at your P&Ls, sometimes how hard it could be to be able to align that with what we look for as a broker. And I understand sometimes there's changes like, let me actually go into some. I'm going to use some case studies here. And that way you can actually be able to see how we look at things as brokers, because you have to look at it on the bigger picture side as well. I understand, operationally, there's going to be a lot of things that you can do to be able to control payroll, control supply costs, all those things. But what do I look at as a broker? What does your lender look at as a lender when they're trying to give you a loan? They need to see that there's more to the bottom line. And, really how we can tell is by being able to compare apples to apples. We have to be able to align the expenses correctly. USALI is great. There's lots of different categories there. We actually look at it a little differently. So I want to be able to show you 3 different examples. The first one is going to be just a basic, smaller hotel, perhaps, an independent hotel, using QuickBooks for their financials. Some I've seen on the back of a napkin. So I've seen it all, believe me. There are also, a lot of times, you'll have independent hotels that sometimes pull money. That's reality. There's cash business there. They take it out. Well, what do I do with it as a broker? I can't use it. I can't use that income at all. So if you're looking at selling your place, you should start putting everything in the books so that when I look at a P&L and it matches the tax return, that's what a buyer has to look at. Yes, you might let me know that, okay, the years before we took $50,000 out in cash or $100,000. Okay, fine. I can verbally say that, but I can't actually use that for a buyer getting a loan. I can't use that for a buyer to be able to get any kind of, really money from a bank from. So just keep that in mind and be aware that you have to be ready when it's time for your loan maybe is coming due. Well, how are you going to get it refinanced? Yeah, I know my lender. I've known him for 10 years. He's going to give me another loan. Well, he's also going to ask for your P&Ls. And if your P&Ls don't look very good, you might be a little hard. So, I think being able to categorize things the right way, show it the right way is very important. So I'm going to go through an example. I know this is a little small, but hopefully you can see it, and you can also ask Ralph. He'll send you a copy of everything, too. So what I've done here is actually taken the P&Ls that I got from a hotel, took out the names, of course, on the left side, the left side. And then on the right, we take those categories that they gave us and the expenses, and we put them into our standard categories, whether that be admin in general, rooms, marketing, franchise, all those things, we put them into our categories, which you see on the far yellow right-hand side of the board. That's our categories. RM for room, admin in general is AG, those kinds of things. Now from there, it goes into what we put together on historical P&Ls and pro forma P&Ls. So taking something as basic, even with an independent hotel, putting them into our categories allows us to be able to say, apples to apples. How do I compare this hotel to another hotel that might be something that somebody has an option to buy? Why is this one different than another? So I think being able to categorize the right way for us to be able to look at it and apples to apples compare it is very important. Let's go into a second example. This one is without food and beverage, but a little more sophisticated, a little more detailed of an analysis. So this is what we received from the owner. And so you can see very good categories, monthly P&Ls, good alignment. A little different from what we use, but that's okay. Very easy for me to actually read and categorize the way we need to as well. So I think that's very important. This is where we categorize what they gave us for each year into our categories. Now, let me explain something. When we talk about payroll, not everyone here categorizes payroll as, what's part of rooms, what's part of admin in general, what's part of maintenance and sales. And I think it's very important for you to understand why it is something that makes sense for you to actually separate. Payroll, yes, I understand it's a big category, but we can't really use payroll as a general category. We have to break it down into what kind of payroll is part of your rooms expense. That would be your housekeepers, that'd be your front desk. All of that would be in your rooms expense. What we use in admin in general would be like your general manager, your assistant general manager. What we use in maintenance would be your maintenance person. In sales, your salesperson. So that, those payrolls need to be categorized into those specific areas so that we can then use it, whether it's us as a broker, you as an owner looking at your own financials to understand how those categories break down in percentages, or even your lender. They need to be able to understand that it's not just a general payroll. What category does it go in? Now, that is what we come back with, and as you can see, these are our general categories that we use and align with things. Now, looking at a payroll like this is what we use, an apples to apples. I can compare it to others, and I can also break it down based on what's an industry average. How much is normally a room's expense? And in that case, what do I see for hotels without food and beverage? It could be as low as 20, but as high as 25. Is it within there? Well, if I see something that is at 30, well, there's something wrong there. Either they're not categorizing correctly, or their payroll is just crazy high. So all of those different categories that we place it into, we have industry averages for too. And I think that's very important to be able to understand. Your lender knows the same thing. When their financial analyst goes through it, they're looking at the same thing too. Now, we also put together a pro forma, and we base this on what that market is doing that you're in. So we'll look at, your star reports. We'll look at how is your comp set performing compared to how you're performing. Are you underperforming? Are you overperforming in occupancy and not in ADR? So those kinds of things is what we take into account, and then we put together a 5-year pro forma, which is something very logical for you to kind of keep in mind as well, is that, how are we doing compared to our comp set? And, where can I improve? Where can I take my hotel to another level? And I think without actually understanding it in more detail, it's hard to do. So I think it's very important to be able to break it down, to build it back up again, and then put together where your budgets are, even for 1 year. It doesn't have to be a 5-year, but at least for 1 year, so that you know what to expect for next year. And your lender, if it's time to get a refinance, also knows what you're expecting for the following year too. Now let's look at one that has food and beverage and what that should look like. So this is what I was given from a owner of a hotel that has food and beverage as part of their hotel operations. Very detailed, very good detailed categories, but too detailed for me. And I think that's something to keep in mind too, is that it's great being detailed, but it's not always, to have a category title and then putting it all under it, similar to this, is a good way to go. Because then I know everything in admin in general should be something I can put as a total for admin in general. And now this particular P&L has actually details of every different section, so that if I have a question, I can go to that section and see what's the breakdown. Is it, how much is royalties? How much is your marketing person getting paid? How much is and something I have a question on, I can go back and take a look at, which is very, very good and important. Well, we take those P&Ls, this is their P&L, into our categories once again. And you can see they have many, many breakdowns. We put them back into where we need to go. I do want to ask the audience, so where does interest expense go? Where do you put mortgage? Or where would you think I put mortgage? Where? Well, you're right. It would not be in a P&L. And the reason is that, for us at least, and the reason is it would be at the bottom line after what we look at. If I'm comparing a hotel to another hotel, or if I buy this hotel and I get a loan with putting down 30%, while another person is looking at that same hotel and they're going to put down 20%, their cash flow is going to be different. So they can take what I have in my P&L and our net operating income, take that and then subtract what they need to based on what they're going to do for a loan, and so we have apples to apples. That's the reason. Go ahead.
And again, it will go for the payroll is also the same. He might be managing himself and he might have.
Correct. And that's the other thing. When I'm a buyer looking at a property, I'll look at this and I'll think, oh, wait a minute, okay, what's the breakdown on the payroll? Oh, it includes a general manager. Well, I'm going to manage it myself. I don't need to have a general manager, and I can operate much more efficiently and take on a couple of hats, so my payroll cost will be so much lower. That's how you should be looking at, if you're buying a hotel, how can I make these numbers better? What can I do to improve it? Is it worth my time to go into this property? And that's why we have to have a standardized format that we can actually be able to show every buyer. They can look at it and say, what can I do with this property? And also understand what kind of loan they're going to get and subtract from there too, and see what kind of bottom line they end up with.
I've never seen a similar P&L from any hotel. Everyone is totally.
Oh, yes, they are.
You don't have a standardized P&L that everybody in this hotel business follow.
That's what the USALI is. That's what USALI is. But that is very detailed. So depending on what you're trying to accomplish with your P&Ls, I would suggest having more of a broad stroke like what we have, and then subcategorize within these broad strokes. So for rooms, go ahead and subcategorize for their housekeepers, front desk, put your supplies, put your breakfast. So all that is within rooms, but at least you know what you're looking at and can be able to use that detail to your benefit. That would be the best way. You have to make it adjust to how you need it to be. Yes.
Is there any source where you can find any kind of benchmarks and everything that we
Yes, there definitely is. Star actually provides benchmarks. There's actually, what is the other company? Go ahead. HotStats provides benchmarks. And so,
questions probably free, but just kidding.
There's lots of opportunities out in the industry to be able to do comparisons. You can do full P&L. You can pick up. There's articles online where you can look at what are
Yep.
industry averages if you're looking.
Raises they give some.
So there's lots of different ways that you can get that. Even the associations, I know that they can help work with you, and your franchise
yes.
companies that you're working with, they can also help you with that information.
And so if you're buying a hotel and looking at what the current P&Ls look like, you would put together your own pro forma based on what you think you can do with the property. You would want to take that to your new lender to be able to say, look, this is what I can do with the property. Give me some financing. I mean, it has to be a good, positive picture here. You should be saying, I have tremendous experience. I can do this, this, and this, and here's my proven track record. Give me a loan. That's very important to understand, is that without having yourself organized to be able to provide your lender with what they need, it will be difficult, especially in today's environment. The lenders are very picky on who they're going to finance and what they're going to finance for. Oh, of course.
I've worked in the lending industry for hotels, and I can tell you that when we look at stuff like that, we very much look at the stuff that you're saying, oh, we don't put on the P&L and whatever on the GOP line, because we're looking at whether you're going to be able to sustain if your interest rates go up and what your margin of flexibility is on your profit line. So that determines whether you get approved or not. And with the new refinancing and everything coming in the interest rates, I highly recommend that you guys follow some of this and have apples to apples, because you're going to hit a wall.
Very true, actually. Today's environment is very different than it was a year and a half ago. There's not going to be 3% and 4% rates for a while now. So you have to make sure, can your hotel sustain the higher rates, especially with SBA at 10+%? Doesn't make sense. Many people's interest expenses have gone, from 5% to now 10%. So they've doubled essentially. And each month, being able to make that payment, is it feasible for your hotel? That's what you got to look at. I actually have a lot of examples of things that did require, a sale of a property because the loan they could not survive otherwise. We're going to next go into a group discussion, and it'll be about your own P&Ls and our P&Ls and how that changes maybe your outlook and what you would want to change as a result of that. So if we can take 10 minutes now and go ahead and actually discuss on your own tables, and we'll have our table friends, I should say, go around and help out. Thank you. As everyone's talking, I just want to also mention one thing that you saw in our P&Ls that you probably don't have in your own. That is a FF&E reserve and a management fee. And whether you have a reserve, which should be sustained each year, between 3 and 5% would be normal, that's going towards maybe every 5 years you got to redo your hotel. Well, you're saving that up for that. And whether you do it on your P&L or a lender is going to do it on theirs, it needs to be a part of your decision-making process. The management fee as well. Now, you may not have a management fee because you don't have a management company running your hotel. The lender, though, they will look at that and incorporate that percentage, because if they have to take it back, they're going to hire a management company to run the hotel. And does it make sense having that in there? And that's another 3 to 5% as well. So keep that in mind.
Yeah, and I think you brought up a really good point, Helen, about reserves, because a lot of our people do not keep that 3 to 5% as franchisees and brands are implementing different renovations that are needed. And I think that's something we should all keep. So that's a huge point right there.
And you should talk to your accountant.
I got out of the hotel business. I'm getting back into it. So I just got one. Right now we are using QuickBooks. So that's going to be a good thing. I attended this class. I'm going to implement what it has. I think we just signed up with Nimble Properties, and I need to get some of the ideas from you. That's why I gave you my card.
Okay.
I really like the options on it, what you just said. And then one thing you brought up, when we have a bottom line that is looking better and we have a better breakdown right now, because the interest rates are so high, it's also giving the bank a chance to give you a lesser interest rate. Like I did one deal right now, they give prime -1. So there is still banks out there that want your business. If your P&L is looking good, they'll go ahead and work with you. Because they know that the interest rate is not going to stay at what they are. It's going to go down in the near future. Commercial, both.
Yeah, conventional.
No, both of them did. It's done by the same bank. Yes.
So did you have a category name reserved on your P&L? No?
Not yet, I'm working through
So you're going to add that, right?
Yeah.
So yeah, he's going to add it and use it as retained earnings to get the tax benefit, just like Mayuri stated. I have it, and it does help, definitely. Again, talk with your accountant. We're not experts, but your accountant will tell you for sure.
Another category we were not using was the management fee.
True. So like Helena explained, yeah. Like I said, the small nuggets you can take away from here. I know P&Ls are very boring, but actually that is the one that really makes us the money. And when you're going to look for loans, interest rates, everything that the bank looks at it comes down to that bottom line. And I think these ladies have really pushed some key points that we can take back. So thank you. Is there any?
Right now, it's a perfect timing because the tax date is very close, April 15th.
So yeah, and make sure you're taking all your depreciations to categorize. We have Fabio, sorry. All right, and he's with SpotX Hotel. All right.
Yeah, just a question. You said something. The FF&E reserve, CAPEX reserve, I can use then and incorporate in the retained earnings as a tax benefit in addition to depreciation, bonus depreciation, marks, and everything else?
Yeah, so you have to talk to your accountant because it's based on your structure.
I will not say
But
it. If you
for the
don't want.
most part, you can take, retained earnings is something that, it's an IRS code, and you have to meet the very few requirements, it's up to $250,000. So whatever tax bracket you're in at $250,000, that's how much you're not paying in taxes.
Accountant don't do nothing when the audit comes.
So then that's why you got to pay attention and do what we're telling you.
2 years ago, my accountant flew when my audit came.
But I think what happens,
Count.
3 million gone. Just like that.
but
I'll
I
give
think
you my accountant's number.
no, I think the problem here is that we never sit with our accountants every quarterly. Actually, you should be sitting with your accountant on a quarterly basis and make sure you don't, you alleviate these problems ahead of time. The accountant's just going to do what you give him or her.
And
That's
all
it.
accountants make you sign this thing, the liability, because it's based on the information you give them. So again, the P&L that you're giving them is what they're basing it off of. So the idea is you should know your information, because you're right. They're not going to take the liability on for you. But you have to understand what's happening. And the best way to do that is to educate yourself and use your own information to your benefit. And use the resources you have. You have a lot of resources here.
Well, even online nowadays, you can
Yeah,
find
even
so many
online,
things. I think
exactly.
our accountant learns more from us than they teach us.
Exactly.
So definitely works.
So do we have any other questions or comments or anything? Right there.
Hi, I'm Punita from Days Inn in North Carolina.
There's two people talking.
Oh, I'm sorry.
Go ahead, ma'am.
I can? Okay. Okay. I'm kind of a newbie here, I guess, but you had mentioned splitting the payroll department-wise, right? How does it help taxes-wise? I have no idea. I just give the total count of payroll, and that's about it.
Hello? Yes, it does. It does help tremendously, not on your taxes, but for your own benefit and for you to be able to say, how much am I spending on rooms? And am I spending too much? And if your lender looks at it, or if I look at it, a person that's going to be analyzing it would be able to say, your payroll is high in the rooms expenses. So maybe, is there something that's going on there that could be resolved? But if you have them all lumped in together, then I don't know how much of that is actually part of the general manager, which should be an admin in general, or a part of sales, or a part of maintenance. And so those are categories that, if you separate it out, it allows us to look at it as an outside person to say, this is not normal. There's something going on here.
I'll give you a for example on that. For those of you who have pets and don't have pets, how much harder is it for your housekeeper to clean a pet room, and how much longer does it take them? That's going to affect your payroll line, okay? And when it affects your payroll line, and me, as your mortgage person, looks at it, I don't know that you take pets or don't take pets. All I look at is that number. So if it's all lumped together, I'm like, geez, somebody here doesn't know how to manage something. That's what I'm thinking in my head, right? Meanwhile, it's not that you don't know how to manage. You've got pets coming out the wazoo and having issues with the pet rooms, right? But if you break it down to housekeeping, then I'm looking at it and saying, okay, housekeeping's really high. Why is that? And I can ask you a question, you can answer it, right? Otherwise, I'm not doing that. I'm not doing that analysis that way. And also, how many of you guys pay your family members? I'm one of them. I get paid through my family business and whatever, right? If I'm looking at you at a lender and that's a payroll expense, however much you're paying yourself, when you go to sell the property, how many of you tell your friends, okay, back that out because, I'm paying myself? How does the lender know that?
But if you are working there, you do need to keep that in there. If it's something
Correct.
that you're just getting a check for doing nothing, that's a different story.
Yeah, it depends, again. So if we had one more gentleman here? Yeah.
I'm sorry. Yeah, a general question for, I'm a hotel aspirant right now. So is there any ratios of, let's say, a high tier, mid tier, or low tier ratio between the operational cost percentage versus the gross sales, keeping other things, franchise fees and all that with the, like right now everybody buys like, okay, I bought it at 3 times gross rent multiplier and all that. That's a basic idea of every of our member, I guess. They will support my statement. Correct. And that is so wrong after listening to you guys that, this is absolutely, we are going down the trench, if we go that route. So a lot of things are involved in this. So is there any, with your experience, like, okay, if your gross sales is $1 million, your operational cost should not be 55% of the one. And of course, we can take the taxes and all that separately. The mortgage comes after the NOI and stuff like that, so I understood that part. Is there anything like a mid-tier, low-tier, or that, okay, this property does $1 million, 55% should be the operational cost, and then you add up deduct the mortgages and all that. Is there any general rule of thumb, plus minus 10% variation or something?
So we usually look at the bottom line. And so after your operational expenses, after your, administrative, whatever it might be, everything, even after your FF&E reserve and management fee, most hotels will average between 30 and 40% down to the bottom. When it's an owner-operator run property or an extended stay property, it'll be closer to that 40. If it's a full-service hotel, it'll be more into the 30. Now, if it's higher or lower, there's something going on there. So the NOI, yes.
The NOI?
Yes.
EBITDA.
And we do look at cap rates. We do look at multipliers as well because buyers look at that. So we do look at a combination of those things plus a price per room replacement. It is, but it is still something that is used quite a bit. I usually look at that and then go back to the other two areas to see if it makes sense before I be able to I can put a pricing analysis together. So
30% given plus or minus 10% should be the profit margin.
Yeah.
Before the mortgage, right?
Before the mortgage, yes.
Okay.
Yeah, but after inflation this year, we'll look at it, how it happens.
I like this.
So we're going to go ahead and move on to our next segment. If you want to go ahead and introduce yourself, please.
Hi, I'm Tanya Venegas. I am the Global Head of Customer Success for Hot Stats, and as you mentioned earlier, we provide P&L benchmarking. But to give you a little bit of idea about my background, I worked with an association called Hospitality, Financial, and Technology Professionals for over 15 years and ran their research center. And the uniform systems, when Mary talked about it, I did a lot of work and background work on that, and I really have a passion for being able to get the information out to the industry and to provide education. So again, if you guys have any questions, I'm going to run through my slides pretty quick here because we're getting close to the end. But if you want any more information on the uniform systems, any of the operational benchmarking, please let me know, and I'm glad to follow up with you on that information. So when we talk about operational benchmarking, really what is that? We've touched on it a little bit. I mean, historically, we've really looked at traditional benchmarking. What is that top line? What is my ADR, RevPAR, occupancy, and how am I driving that top line? But what is it all about? It's driving profits, right? We don't get to take that revenue home. We get to take the profits and the bottom line home. So we're taking that from the traditional to the operational benchmarking aspect of it. And we've already touched on a lot of bits of that. And I'm going to build on what Helen and Miari have talked about. So we've got the structure. We've put the P&L together. Now, how do we look at it and look at what we're going to benchmark and how we're going to track that and move it forward? So what I would like to look at is we have what we call our operational benchmarking wheel. It breaks the process down into 6 easy steps. So if you just go through 1, 2, 3, 4, 5, 6, focus on 1 or 2 key things for your operation and how you can make a difference and what's going to drive the most profit to the bottom line. And I'm going to go through each one of these step by step. So, and again, glad to share these out. We've got pictures going. There we go. So the first step, identify performance gaps. Compare your data versus your competitive set to identify the biggest opportunities for increasing revenue and reducing costs. So that has everything to do with driving it to the bottom line. When I say competitive set, it doesn't necessarily have to be an external competitive set. You can be looking at your own data year over year. Like we were showing the standard look earlier, your budget versus your actuals as well. So any of those types of comparisons and look at what the track and the trends are going there. So when we talk about types of benchmarking, you have your internal benchmarking and your external benchmarking are going to be the 2 main types. Internal, again, looking at what's going on within your operation. If you have multiple hotels, you can compare those and see what's going on in each one of those properties. External benchmarking, we have 3 different types there, but in the hotel industry, we're really focusing on that top line, that competitive benchmarking. So what is your hotel doing against other key hotels in the market or in the industry? I have a quick question for everybody in the room. How many people have full-service hotels with F&B in here? Okay, we've got a few. Select service hotels? Okay, extended stay? All right, so we have a good mix in here. Yes. Oh, am I too far away? Thank you. All right. So, and then defining the relevant competitive set. So again, historically, we've usually said, okay, I've got my hotel, I can only compare it against within hotels within a 5-mile radius, say. Look at the bigger picture and being able to look at that asset and what does it bring to the market. We have unique properties and destinations like college towns. So there's a different seasonality there, or a beach location and those sorts of things. And maybe sometimes you don't have hotels right there in your immediate market that are a good comparison. So looking at other properties maybe in other markets that are comparable and looking at how they are structured as well with their operation. Step 2, outline the strategy. Define the medium and long-term strategic goals that will deliver the greatest profit enhancements to your operation. So again, you can put together this P&L that has all these different lines in there, but what is really impacting your bottom line? Is it labor? Housekeeping labor is one that's come up over the last couple of years. It's been a huge impact on bottom lines. Are we keeping in-house labor? Are we using contract labor, which we found that's been a complete shift since COVID and the break there, so a lot of that's moved over to contract labor, which is much more expensive. So how can you impact turnover? How can you keep employees in-house, which is going to save you money in the long run? Different things like complimentary breakfast, and what are the trends there, and how can you decrease those costs as well? So maybe you say, those are the 2 things in my operation I want to focus on, and those are the ones that I'm going to move forward with. And when you think about seasonality, I'm moving away, so I'm going to stay up here still. Give me seasonality versus moving average. We touched on it a little bit earlier, cash versus accrual basis accounting. We still, from our clients that we work with, there's a lot of people that use cash basis accounting. So that gives you lots of lumps and bumps in the data. You get a lot of highs and lows. And you can see this is a graph that we had, and it shows back through COVID and how the data dropped there and how we've been able to move back up. But you can see all the big highs and lows there. So this is a seasonality graph. The averages are the actuals of each month. And then we also can look at the moving average total graph. So each point on this graph is the average of the previous 12 months. So this really gives you a big picture of which direction your property is going on these line items. So just again, a way that once you get those P&Ls structured, how you can look at the data and the different ways that you can kind of slice and dice it to get the ideas of how you're tracking in the industry. Step 3, defining the KPIs. So again, Mayuri showed us the standard P&Ls and being able to look at KPIs based on either per available room, per occupied room, or a percentage of revenue. So when there's different cases where you'd want to use each KPI, so if you're looking at things on a per available room basis, this is going to be looking at more fixed cost, things that are like your GM salary or sales and marketing costs and those sorts of things which aren't really impacted by occupancy in your property. Then you're going to have per occupied room. So I always like to use complimentary breakfast. That's one example where you're going to want to look at it on a per occupied room basis and see what the costs are there. And then you have your percentage of revenue. So again, this is independent of differences in revenues, the revenue generated, and being able to move that forward and look at that data there. So we have a couple of numerical examples here. And I think this is a good one where you can look at actuals and you can say Hotel A made $550,000, for example, and you have Hotel B, $700,000. You think, Hotel B made more money. They made $700,000, it's $150,000 more than Hotel A. But once you look at the ratios towards the bottom and you look at RevPAR, occupancy, and ADR, you can see that Hotel A is actually greatly outperforming Hotel B because of the size of the property and the occupancy that they have in there. So again, being able to pick which ratios and KPIs that you're looking at. Numerical example 2, you have your complimentary breakfast. So we look at the top, and we're looking at the per available room cost versus your per occupied room cost. So again, since complimentary breakfast is based on occupied rooms, and when you look at that statistic, you can see on a per available rooms, Hotel A looks like they're outperforming because it's $3.33 per available room whereas your Hotel B is $4.38 per available room. But then if you look at on a per occupied room basis, you can see that Hotel A is underperforming at $541, where Hotel B is outperforming at $447. So step 4, the holistic approach. So to me, this is one of the most important steps in the process, is being able to involve everybody in this process of being able to improve your performance at the property. So not only leaving it with the finance person or the person looking at the P&L and saying they're responsible for this, but if you have departmental managers being able to put the information and at their fingertips and being able to look at it, whether it's on a monthly basis because you have a monthly P&L, or it could be quarterly basis, as most of us are getting the information from our accountants on a quarterly basis and being able to analyze it that way, but making sure everybody is involved in that process and being able to improve performance. And then best practices, being able to put those best practices in place. So again, if you have multiple properties, being able to put that in practice in each property, or just being able to look at different departments. So what's working in one department, can we utilize that in other departments and be able to move those things forward? And this is one of my favorite slides. What is an index? So again, when you get your P&L and you have all those numbers out there, when we're talking about versus a competitive set, you're going to see your data, you're going to see a competitive set's data, and then you're going to see the index. So that's how you're performing against that competitive set. So if you're underperforming, of course, we're sad. You're less than 100%. If you're equal to, you're like, meh, I'm doing pretty good here. I'm not really smiling because I'm not outperforming, but I'm on par there. Or you could be outperforming over 100% and being able to exceed your competitive set. So I'm going to go through a couple of examples. Here, we're looking at your ADR. So again, what we're going to look at is that very last column where it says index is a minus 40.2%. You're going, ooh, that doesn't look very good. But when you look at that first one there where it says 120.8%, that says, hey, but my property is improving year over year, so what's going on? You're actually losing to your competition. Your competition is catching up a lot faster than you're being able to keep ahead of them. So it's important not only to look at what direction is that specific KPI going, but what is the variance and the trends in there. And again, this is a very quick example. If y'all want more examples or any further information on this, please let me know and I'd be glad to run through the examples with you. The second example, again, we're looking at that last kind of column over there with the variance. You can see that from this year to last year, you're moving in the right direction. Occupancy is up 6.8, your ADR is up 13.5%, but then your index is still dropping behind your competitive set. So you're at a minus 2.6 for your occupancy percent, and then a minus 1.2 on your ADR. So in keeping both of those, you have to put both of those things in the mix to be able to analyze your data. And then step 6, this is the last one, and it's reviewing. It's a continuous process. We can't just outperform and then say, we've done it, we're moving on, and we don't have to look at this anymore. But we have to keep looking at it. And I know I say housekeeping labor a lot. When I go to conferences and I speak to people, that's one of the most expensive costs in a hotel, especially for a lot of the select service hotels, complimentary breakfast. So always looking at what can I do to improve there. We actually had a planning call with Ralph, and I loved one of the examples that he gave us, is that a property, their complimentary breakfast cost was very expensive, and he figured out that people were picking up, they had whole fruit, and people were just grabbing the whole fruit and leaving the hotel with it because that was their mid-morning snack. And he said, well, what happens if we cut up the fruit? Then they can't just grab it. We're still meeting our brand standard by providing the fruit, but maybe we can think about it a little bit differently, and actually drove down their complimentary breakfast costs. So I'm sure there's lots of examples of things like that in this room where y'all can share that information. And when we talked about the benchmarking information, working with the brands, they know the data, they know what the average hotel is doing by brand, and asking them, saying, hey, what are you guys seeing? How am I doing? But you have to have that P&L first to be able to have that conversation with them. So I think utilizing them, and we sit in the middle because we work with brands, we work with owners, and we work with operators, but I love those collaborations where everybody can kind of work together and be able to share that information and best practices. So key takeaways, look at the full story. Don't look at that top line only. Look at how can I drive revenue in my hotel, but the most profitable revenue. Be able to benchmark in as a continuous process, as I mentioned, and step 6, and approach the data from different angles. I introduced a lot of different concepts there, whether it's moving averages and looking at the graphs in different ways, or the seasonality, or looking at different KPIs. When we talk about the uniform systems, there's probably over 500 different KPIs. If you do everything that's in there and slice and dice it, it's so much information that you have at your fingertips when you start doing it. But we've worked with properties that have as few as 10 lines in their data. So where can we start? Is it total expenses? Is it labor costs? So what is your total labor cost? Because we're reporting on one line. And then what if we just break out rooms and be able to look at that? And when we look at it as rooms profitability. So we can't do rooms profitability if we don't know what our rooms labor is. So that's a really important metric for hotels to be able to track. So starting somewhere, whether you have 10 lines in your P&L, you look at your P&L on an annual basis, a quarterly basis, or a monthly basis, but being able to utilize that to best affect your decisions and your operation and be able to move that forward. So that's it for me. We're going to have some time for a Q&A. If anybody has any information or you want to share any stories or ways that, as everybody's already been doing, to help your operation and move things forward. And I really appreciate the time today with you guys.
Yeah. I think everybody's going to leave this room and make their parking lots statement so positive that, Helen, it's going to look good when they sell the hotel.
I have a question over here.
Keaton Patel from Louisville, Kentucky. I've got some independent hotels and franchise hotel. I just opened a pet hotel about 2 weeks ago. What can I tell bankers? I always get a no in my market. We don't want to do hotels. What are you seeing across the country about P&Ls and banks, and what should I tell bankers? Something different, or what? Tell me more about the banking industry right now, about the no's.
You know, actually, there's yeses in SBA, which, you know, that may be the only avenue sometimes. USDA now is not an avenue to go to anymore because they've changed some of the criterias there too for hotels. So SBA 7A and 504 may be good options. The other side also to look at the green program that they have, which allows that lending limit to go up. And it could mean just, you know, changing out toilets or, you know, putting like the LED lights and those kinds of things that allow you to qualify for their green program and allow that that limit to go up, which is very important right now. Conventional, you know, they're very picky right now. Lenders are very picky. Construction, you can't even find any. So, you know, I think on the conventional side, you're going to have a lot to put down, anywhere from 35 to 40. So the down payment's going to be significant. But with good relationships, though, if they find that, look, I can, you know, we're able to work with this this borrower in the future as well, and, you know, they've always paid their own time, let's go ahead and start building a relationship. Your rate can also be a lot lower than where it would be with SBA. It's just a lot more of a down payment. So I think relationship-driven banking is still a really strong way to go. But yes, very picky, very difficult to get financing in today's market.
There's, like she was saying, there's a lot of new things on the back end of it that are restricting the bank's ability to do that. But certain banks, usually the smaller ones, they have reserves that they can, discretionary loans that they're allowed to do. They have to still meet federal requirements to do that. So when she's talking about relationships, that's where if you know the banker and you know the bank and you're able to get into that particular type of loan, you qualify where most people would not. And that's a little bit more intricate to get to, but let's look at your market and we can have a chat.
Any more questions?
Pet pet hotel. So is it a brand?
It's independent, which can be a franchise, so we just opened 2 weeks ago.
Yeah.
Yeah, no franchise fees, though.
So then you really need to look at your P&L, because what happens is there's a breakdown of your franchise fees versus what you're pulling in. And we can have an in-depth conversation about this, but one of the requirements of most banks, in addition to the insurance and all that other stuff, is to have a flag, which is why you're forced to sign the FDD. Not the FDD, the franchise document, sorry. There are some franchises that require pets, yes. The what? Banks don't look at that. For the most part, they're not looking at whether you have a pet hotel or not. They're looking at your operational costs and stuff like that, the bottom line.
They just want to make sure that the bottom line is strong and make sure that they can get paid.
Yeah, I warn you with pets.
Any other questions? All right, I guess everybody learned a lot. I'm sure they took away one key item.
So we have a couple QR codes that are available to you guys. If you want to just snap them real quick for additional information. These are the free resources available through AHOA on this QR code, and then we have one more. Go ahead and let me know when you're ready for me to go to the next QR code. Everybody. Everybody all set? I'll go to the next one. And then this is a survey for the, I guess, the Q&A. But thank you guys. We really appreciated your time, and we hope you got some good takeaways.
Thank you to the panelists. Thank you, Mayuri.
Thank you, Mayuri. Thank you, Tanya. And thank you, Helen. Hope you guys enjoyed their questions and answers. Thanks. Bye.